Hey everyone, this is Robert with goldsilverpros.com, and I'm here today talking with David Splett, CFO of Northern Vertex, who runs the Moss Mine in Northwest Arizona. David is also the previous CFO of Goldcorp Latin America. The mine is a low-cost heap leach open pit operation located in the historic Oatman mining district, which in the past has produced over 2 million ounces of gold. Northern Vertex is targeting production of 50,000 gold ounces per year. Hi David, how are you?
Good morning, Rob. How are you doing this morning?
Very well. Thank you for joining. I know there's a lot going on in the economy right now with the coronavirus and all of the shutdowns. So wanted to touch base with you guys and see how you're doing during this time. Has this affected you guys at all, or how are you doing?
Well, we're fortunate in that none of our staff has been impacted by coronavirus, but we've put in quite a few procedures and systems in place to detect and prevent any potential infection of our staff. So we implemented a business continuity plan probably mid-March-ish or so, which included taking the temperature of people getting into vehicles, including sanitizing the properties, and a lot more social distancing before we were being asked to do that as a society. Mm-hmm. And we took the steps that most of our meetings would become virtual. So we've been fortunate that we've been largely unimpacted by COVID. There have been some supply chain challenges in terms of getting materials in, but we pre-purchased quite a few supplies, operating and consumable supplies. So we were well stocked in advance of the real front end of this wave of the COVID virus.
Okay. Well, that's good to hear. Yeah, I know a lot of mine closures in Peru and in Mexico, it's really affected the overall supply of precious metals to the market. But as you're saying, all of the interruptions in the world trade, especially supplies coming out of China, I definitely would have an effect on operations. Good to hear that you guys have prepared for that and aren't being affected by it right now. I want to jump a little bit into your growth profile. I think we last visited with you guys out in 2018 when I did a site visit out there in Northwest Arizona. How has your company grown the resource on the project since we last talked? Or can you talk a little bit about your growth profile over the last 2 years?
Right. So it's what really attracted me to Northern Vertex was the property. It's an interesting property, and it's largely underexplored. And I think what we found in our 2019 drill program was a verification of that hypothesis. So we started out with a resource somewhere around 435,000 ounces of gold. And after 2 years of mining and depletion of 70,000 ounces, after we did our resource update in late 2019, that resource grew to almost 500,000 ounces. So you had 70,000 ounces of depletion, yet a net growth of about 170,000 ounces. And we think there's quite a bit more growth that we're going to be seeing in the next year or two. And given that strength of our conviction around those ounces, we're going to be doing a drill program that's going to commence in probably about a month's time or so, looking to do quite a bit of infill drilling, some step-out drilling, and a bit of exploration drilling. And our overall target is we'd like to see a doubling of our resource going forward and a significant conversion from inferred into measured and indicated.
Okay.
It's
yeah.
Attractive property.
I know in 2019 you did have that infill drilling program, which added, I think, 14.5 thousand meters of drilling, and that substantially helped your resources. You guys also have about 10,000 acres. How much would you estimate that you've explored so far of your property, and how much do you have left over?
Oh, I would think we've explored maybe 5 to 10% of the property. And what we see is along the West Oatman. And the West Oatman is a vein of gold that's largely a duplicate of the Moss system that's located about 3 to 4 kilometers to the south of our existing mine. And we think there's great potential there. But our primary objective is to make sure we've got enough resources to continue to feed our existing mine. That's our first objective of our drilling program. And the second objective is on the west flank of our mine, just a little bit outside of that flank, there's approximately 100 to 200 feet that's not even captured as indicated resources, which means there's blue sky growth there for easy growth for us and potentially up to a couple 100,000 ounces. So before we do significant exploration, greenfield exploration, we've got great potential almost immediately adjacent to the mine. Once we do that this year, just as the year progresses, we're going to step over to West Oatman. We're going to twin a few holes, and we're going to start doing verification that the West Oatman is as good as we think it is. And we think, again, there's going to be another opportunity to grow our resources. But first off, the lowest cost option for us are those ounces that are right in the pit at depth or right adjacent to the pit.
Okay. I know that you guys have listed over 200 high-grade historic gold showings, and you have about 1.5 kilometer strike visible at surface. How much of that have you guys touched with your operations, and how much of that will you be looking at in the next few years?
We're going to be looking at largely, or not largely, we're going to be looking at all of that strike. And I would say right now, at best, we're probably about 500 meters of that 1 to 1.5 kilometers. And we are going to immediately go after the eastern flank, taking a look towards the east, out towards the Grapevine system, which is about a kilometer away, and determining if there's continuity in the vein system all the way out that way. And I think that's one of the big objectives this year for us, is to see what kind of continuity do we have in this system. And particularly, we have two veins right in our pit. You know, it's attractive to say we're going to grow lengthwise across our deposit, but interestingly enough, we have two veins that intersect, the Moss vein and the Ruth vein, at depth, and there's potential for very, very high-grade material right in the center of our pit at depth. So there's a lot still we need to understand of this system, and we know right now that our resource is sitting somewhere around 500,000 ounces, just under 500,000 ounces. But we think there's significantly more, and where that's going to express itself most likely is right close to the pit. And once we're into the, say, the 600, 700, 800,000 ounce range, then let's step out. Let's start looking for opportunities to explore some more, and then let's also look for debottlenecking opportunities where potentially we can increase from 50,000 ounces a year to 60 or 70. That's the natural. Grow the resource, debottleneck, and do greenfield exploration.
Okay. Moving over to some of the operational improvements you guys have had over the last few years. I see that your water usage is down quite a bit. You've reduced your recovery time from 120 to 45 days, getting the metal out of the heap leach pad. You decreased your reagent consumption, which has increased your recoveries, and you've increased your tons per day output to 7,500 over the economic assessment of 5,000. Can you talk about why the company has focused so much on operational improvements over the last 1.5 to 2 years?
Well, I've worked in base metal companies. I've worked in gold, silver. So I've worked through largely the full gamut of metals, from potash to zinc, lead, silver, gold, indium, germanium. And ultimately in the commodity business, low cost wins. And low cost is usually driven by simplicity and focus on operating excellence. So the team we have in place in the Moss system, in the Moss mine, are focused on how do we become the lowest cost gold mine possible to that which the property will allow us to be. And when we look back in history, our all-in sustaining cost for the property started off somewhere around $1,200 to $1,300 per ounce of gold. And at the end of, for March, I believe we were somewhere around $1,040 per ounce at the Moss mine. And it's these kind of improvements that continue to drive down our all-in sustaining costs, with the objective that eventually we're a $900 or an $800 AISC property. So when you ask me the question, why are we focusing on reagent usage? Why do we focus on water usage? Water is critical for a heap leach operation. And as we do further improvements to our operation, which will drive up more costs and drive down AISC, such as going from 1/4 inch crush to 3/8 inch crush size that's placed on the heap leach. That will significantly reduce operating costs. That will increase gold produced, and we will need a bit more water. So that water preservation program that they focused on helps us going forward.
Okay. You guys had, it looks like you peaked in production in your Q1 with 8.4 thousand ounces of gold production and 68,000 ounces of silver. It's fallen a little bit so far in the ensuing quarter. Can you talk a little bit about why you had that fall in production and what investors should be looking at going forward with you?
I think it's critically important that investors think about how an open pit heap leach operation works. And the fact that we were constrained by our operating permit. And I think our share price was pressured by virtue of being constrained of a historic operating permit that kept the property on a very tight footprint, difficult to operate. And alongside of that, we had to complete a heap leach expansion, what we call pad 2B. And in Q2, or our fiscal Q2, it was a good quarter, but suffice to say, we were to complete our pad 2B heap leach expansion in about November, December of last year. What we decided to do was defer that to about February or March of 2020, such that we could do some engineering improvements that would help further facilitate gold recoveries and improve the engineering and the operations management of this pad. So that pad was actually delayed by about 5 months, which impacted gold recoveries. So when you saw a peak in our gold production and then a bit of a fall off, it was largely because we had a very tight footprint, and we also delayed our pad 2B operation. That pad 2B was commissioned at the end of February, and we had our first list put in March, and we're starting to see a real ramp up now in our gold production. And we think this quarter, Q2 2020, calendar Q2 2020, is going to be a very good quarter for us. And we're seeing days that will be anywhere from 110 to 160 ounces of gold production per day. So we're seeing indications that the pad 2B heap leach area is working very well, and we're getting good gold production from our previous pad 2. So there was a peak last year around September, and we recognized that. We knew that it would come off in Q4 calendar 2020, and we're starting to see now the benefits of more disciplined operations and project management, and the engineering improvements that were embedded in pad 2B. Now, I'll apologize because I mix fiscal year quarters and calendar year quarters, and it's confusing for investors. So I'll try and stick with a calendar year quarter. I think it's a little more amenable to everyone.
Sure. Moving over to finance here for a moment, talk about your share structure and the convertible debentures that you guys have.
So our share structure, we have about 249 million shares outstanding, 159 million free float. We have 75 million attributable to Greenstone, and there's some convertible debentures and warrants. The convertible debentures is largely sitting with European investors, and these investors are long-term holders. So this is May of 2021 where the convertible debenture comes to a point where there's the conversion feature. Our view is we're less concerned on the convertible and more concerned on how do we create shareholder value up to that point so that it's an easy election for all of our shareholders. Because we do have warrant holders, we do have convertible debenture holders, and I think the ideal for all these folks is that we create shareholder value such that our share price climbs back up to where we think it should be, such that there's no difficult decision for these folks. And we think between our exploration program, what we're doing for operational excellence, driving down our AISC, and the M&A opportunities that are currently sitting out there, that we can make it a very attractive option for these folks, these investors.
Mm-hmm. Yeah, recently you guys did a deal with Mavericks Metals. I think it was a royalty streaming agreement. Can you explain a little bit about how that agreement works and how that speaks to the confidence in your project?
The silver streaming, it's a very common practice in the mining industry, and basically it's a financing practice that a lot of companies seize on when they're in construction or to facilitate an expansion. And Mavericks is an excellent partner to work with. And what Mavericks did is they brought forth to us $20 million of financing for a long-term streaming option, where it's $20 million up front, and then we have a $3.5 million or a 3.5 million ounce silver stream that is payable to Mavericks, and we get paid approximately 20% of the market value of the silver, and then they get to take the full revenue or the full price of the silver for themselves. So for us, what we have found to be very interesting is that when we completed that financing arrangement, the gold to silver ratio was typically trending around 60 to 85 to 1. We're now seeing the gold to silver ratio sit somewhere up around 100 to 120 to 1. So that overall cost of financing has gone down by about 15 to 20% for us. So by the grace of God, things have really worked out well for us.
Mm-hmm. So lastly, David, I want to talk to you about what steps you guys need to improve in 2020 and beyond. Can you talk about what your goals are and how you plan to meet investor expectations for the next year?
Well, I'll say this. For our investors in Northern Vertex, I would like to highlight to each and every one of you is the fact that our commitment between what we say we're going to do, what we're doing, and what we did, there had better be very high compliance. And we talk as an organization that our commitment is our bond. And so this year, as we're finally getting into a good operating cadence, and we're seeing continuity day to day in terms of our production and our costs, we are now starting to plan for the next steps that will significantly improve the mine. Mm-hmm. These steps include, number one, commissioning the power line project, which is in construction now. So this is a 6.9 mile electrical connection into the grid, which takes away diesel generated power and reduces our costs from a historical 31 cents per kilowatt hour down to, I would think it's about 8.5 cents now per kilowatt hour. When we did the economics, or when we completed the economics about 6-8 months ago, it looked as though that the net present value of this, or the absolute savings of this, would be about $15 to $20 million over the course of life of mine. Mm-hmm. As we move into other areas, we think that benefit is actually going to grow. That's number one. Number two is we're looking to June of this year or July of this year to do a test pad for 3/8 inch crush material for our heap leach pad, going from 1/4 inch crush to 3/8 inch crush. Mm-hmm. This will increase gold production and significantly reduce operating costs. So that's a second step. The third step is the exploration program, where we're targeting to significantly grow our resource from just under 500,000 ounces. And our target is to see if we can add anywhere from 25 to 50% in terms of ounces this year. That would be highly valued in the market. And then fourthly, we're looking at mergers and acquisitions. What is out there right now, and we've been talking with various companies to see if there's opportunities to tie up. And part of the logic is, do you get some synergies in terms of technical expertise, and you drive down those G&A costs as a percentage of your overall cost of an organization?
Okay.
We would also say that there's significant other improvements that we're going to be carrying out in the mine. And this is a list of about 6 or 7 other items, but those top 4 are going to move probably 75% of our absolute share price growth in the next 6 months.
Okay. Thank you very much, David. I appreciate your time. Guys, if you're interested in Northern Vertex, you can find them on the Toronto Stock Exchange Venture under symbol NEE, and over the counter in the US under NHVCF. David, I appreciate your time very much. Thank you for joining.
Rob, a pleasure. Thank you for having me.
Absolutely.